In this video, Gene Munster of Deepwater Asset Management points out that despite a pullback in major tech stocks, they have shown significant long-term gains. Gene states that the market nervousness stems from investor apprehension about upcoming economic indicators and the Federal Reserve's policies. He views the ongoing pullback as an opportunity to invest in strong tech companies like Micron and Apple, as he believes we are still in an early to mid stages of a multi-year bull run fueled by AI advancements.
Ultimately, you said the returns have been good, up 33% the Nasdaq over the past year, 90% over the past 2 years, and that really sets the bar. That's what's in investors' minds. So any sort of hiccup and even any sort of change in the trading dynamic, a day like today, we don't have any news in tech. There's no reason for us to be having this pullback, but here we are, and I think that this is just evidence that investors, tech investors, are looking at the calendar and seeing one event between now and when big tech earnings come out at the end of January. That one event is the CPI number on January 15th, and so for those investors who have enjoyed this ride, you look at the next month, it's understandable that we have had this anxiousness in the market.
So with the market a little more anxious and certainly bigger uncertainties around what the Fed does next year and policy, I guess, do you have to be more scrutinizing of these valuations?
I think the simple answer is no, and I think that this is what I would describe as an uncomfortable truth, how the market is going to trade over the next couple of years, is that I think we're still in the mid part, still early to mid part of a multi-year bull run that will be powered by AI. And it's when you think about those numbers about what the Nasdaq has done, that comment almost feels out of touch with reality, but I want to frame it in that we are going to have pullbacks. We had 12 pullbacks from 95 to 2000. The internet was that. And the market is going to go sideways for certain periods. But I think if you look at in total over the next couple of years, that the substance of AI ultimately will exceed the hype. And we can drill into names. But I think that we can. Okay, so let's
because not all valuations are equal, right? NVIDIA is trading 46 times next year earnings, while Palantir, what is it? A lot higher.
A lot higher. Well, I said 46. If you look at NVIDIA on calendar 26, it's trading at 23 times. And so I think that
208 for Palantir.
208. So, you know, I think we have to, again, big picture is I think that this AI is going to pull the whole market. And we do tech investing at Deepwater. And so from the perspective of, you know, where are some of these better companies, I think you look at Micron, that's a company that we own. I mean, it's trading at about 10 times. It sounds like I'm have something wrong with my spreadsheet here. It's trading at 10 times calendar 26 earnings. And obviously it had that big pullback last week, but I think it's a symptom of investors just not understanding how important high bandwidth memory is. You look at a company like Apple, the expectations for the iPhone for the next year, for fiscal 25, is for 3% growth. They're going to hit that falling down just based on what happened in 2021 with this huge 37% growth. They're going to benefit 3-4 years later from that. And so, Sarah, I think that you look at a company like Apple that can exceed expectations. You look at a company like Micron where the estimates are wiped out. I think that this is still a great opportunity for tech investors over the next couple of years.
Well, so you are breaking it down by ones that you see with lower valuations and lower expectations to where reality
Google would be
is.
another one I would mention too, and I think that's part of just our investing philosophy is to find these transformative companies, but also have an eye for valuation. But I would mention Google there too. Google's not out of the woods.
Why? Is that a quantum story? Is it an AI story?
Well, I think that Google is still in the front part of this year is still going to have a great run because I think more investors are going to understand that they've made some significant progress in Gemini. We saw it last week with some of their thinking models now exceeding what's happened with what OpenAI has shown. I mean, that is a remarkable turnaround after basically this cover-up job that Google did a year ago around multimodal models. Now they're actually showing some substance around these thinking models ahead of OpenAI. But I want to just mention one thing about Google that is important is the Google conversation, I think, again, is going to continue to move higher. I think their search numbers are going to be good over the next couple quarters. But there is still this seismic change in terms of how people are going to be using. ChatGPT, this number just is surprising. They don't give a daily active user number. They give a monthly. It's about 300 million. Their daily users are only 150 million. I mean, that's a small number. You compare it to Google search is about 2.5 billion a day. And so my point is that there are companies like Google to own. I think that, but I think there are some questions just in terms of as more and more people see the clean results that you get with GPT and just a pure Gemini offering, I think it's going to change some behavior. So I don't think that that company is necessarily out of the woods, but I think it has a good, strong trade here in calendar 25.
There's also regulatory.